Welcome back to our fourth and final video in our life insurance series. Now, if you haven't had an opportunity to watch the first three videos, I would recommend you spend a little bit of time going back through those, as we're going to reference those videos here in this one as well. Quick disclaimer, Financial Design Studio, we don't sell insurance for any of our clients. That said, we do review it as part of each client's financial plan because of how critical it is to the overall makeup. So far in the series, we've talked about the difference between term and permanent contracts, how to get money into a contract, how to get it back out, and the difference between face amount and death benefits. Today, we're going to talk a little bit more detail about the other things we should be looking out for as we're evaluating the contract on a regular basis. Now, we often get asked, how often should you be reviewing your life insurance contracts to check up things, see how they're going? I always like the rule of thumb is every single time you get an annual policy statement, which means you'd be doing it once a year. Now, once we have our statement, what are the things that we should be looking out for? First and foremost is insurance costs. Are the insurance costs that we're seeing on our statement lining up with what we would have anticipated otherwise paying? The way that we would look at this is we would refer back to that cost per thousand calculation that we talked about in a prior video. We'd match that up with the net amount at risk, which is the death benefit, not necessarily the face amount of the contract that we talked about before. We would figure out how much insurance company money we're buying, compare that with the cost of insurance, and figure out our cost per thousand. Now, first up, if we do that calculation and we see, hey, that number's really high, first I'd encourage you double check your math. It's really quite easy to make a quick calculation error in this stage. So before we get riled up, let's verify, double check our math that we're all good to go there. Next, after we verify the math, maybe it is still a little high that you would expect it to pay otherwise. In this situation, we would recommend that you would reach out to a trusted insurance agent, request some quotes on maybe a replacement policy to figure out what would make sense for you and your family. Next up is surrender charges. Now, if you've purchased a policy in the past 7 years, chances are you are going to be in what's called a surrender charge period. Now, a surrender charge is essentially an additional withhold back on your cash value if you decide that you want to surrender the contract. Now, why would the insurance company do this? Part of the reason is because when the contract was originally sold to you, the insurance company actually paid a commission to the insurance agent as a part of making that sale. Well, that means they weren't able to apply all the proceeds from your first few premium payments into the cash value or to the insurance costs as they would have otherwise. The surrender charge is a way for them to make up that money if you decide that you want to change your mind within a certain time period. That said, surrender charges themselves aren't necessarily inherently bad. It's only in a situation that we want to look at if there's something seriously amiss with your policy and make changes during this period, because surrender charges can be quite expensive. Next up, we're looking at MNE charges. Now, if you have a policy that is a variable type, so if it's a variable universal life or a variable life policy, or maybe even a variable annuity, you may have heard this term MNE. It stands for mortality and expense. And this is actually an additional charge on top of any sub-account within the contracts. So let's say a particular sub-account had a net expense ratio of 0.7% per year. Let's say there was an M&E charge of 0.9% per year. Well, if you had a $10,000 investment into that fund, you'd be paying $70 just for the net expense ratio and $90 just for the M&E charge. The reason this is so important is because to the extent that we can minimize costs as we can, we really want to. If we had too many costs built up in these contracts, there's a good chance we're not going to see the returns that we were anticipated or illustrated to receive earlier on when the contract was originally sold to us. Now, what can we do about it? There are some things that we can do with certain contracts if we place more in the cash value, or if we wait a certain time within the contract to allow those M&Es to reduce or potentially even expire. Also, another thing we can do is we can compare the net expense ratio and the M&E charge with other contracts as well. If we're past our surrender charge period and these charges, the M&E and net expense ratio on the individual funds, are lower in another contract, there's a good chance we could look at making a replacement policy and save ourselves a lot of money in the process. After M&E, we're going to look at other costs. You'll notice that there's a consistent theme here associated with our policies, and that's cost. Unfortunately, one of the biggest challenges that we see with insurance contracts are costs. When contracts get to be too expensive, they outlive their usefulness and they end up becoming more of a drain on your finances instead of a betterment. So we want to make sure that's really intentional and really clear as to say this contract's working well for your family. What are the charges we're looking out for here? First up, we're looking at admin charges. These are very common in a lot of policies, and it's essentially an additional charge that you're going to see on the contract to cover the back office things for the insurance company. We are finding more and more recently that a lot of carriers are trying to reduce or potentially eliminate these admin charges. So it's important to be mindful of what is the admin on your contract, and is there a way that you could replace it with something that doesn't have an admin charge? After admin charges, another thing we want to be on the lookout for are state premium tax charges. Every time you make a premium into your contract, the insurance company actually has to send a portion of that back to your policy's originating state in the form of a tax. Now, some policy carriers will actually apply whatever the state's premium tax charge is. In Illinois, it's 0.5% per year. Other carriers might actually apply a flat rate across all of their policies, regardless of what state the policy originated in. It's important to know what this state premium tax charge is, because this can range all the way up to 4% on every premium made. Meaning if you added $1,000 to your contract, $40 of that could be withheld from the cash value or from the insurance costs and not being applied directly to the benefit of your contract. Finally, results. A big reason why you probably chose a permanent policy over a term contract is the fact that there was a cash value associated with it. It offered some future life protection and the ability to defer taxes, obtain some creditor protection associated along the way as well. Well, that's great, and there's nothing wrong with that, but we want to make sure that the policy is performing along the lines of what we were anticipating. If it's not, it is time that we want to evaluate and say, is there something better out there that maybe, hey, we're past our surrender charge and we could look at a new policy with potentially lower costs and better investment options underneath. So the way to compare this is you would look at the investment options that you have in your contract, compare that with the consistent benchmark. If we have a large cap fund in our policy and we have a large cap benchmark, maybe like the S&P 500, if our fund is not performing close to the S&P 500, that's an issue. We need to be aware of that and make a decision to say, okay, if these funds are not performing, we need to look at something better. So all that to say, there's lots of details and variables that we need to be reviewing and thinking through as we're evaluating our insurance contracts. If this brought to light any questions that you may have, or you've been reviewing a policy and you have some questions about that, you'd like to chat through with someone, please let us know and reach out. We would absolutely love to help you.